And then, of course, if you're unlucky enough to have companies or investments in Venezuela, Argentina, Lebanon, Turkey, South Africa, fill in the blank.
It's interesting because so many people have been coming to us in the last year. They look at and I've heard you talking about this 2020, this calamitous year, which I think you've suggested. I mean, look at how well Bitcoin has done. And people have been coming to us because they're seeing for the first time the United States isn't what they thought it was, or their country, or their government's not supporting them the way they thought it was supposed to be. What is it that brought you around in 2020? Because I read that you were looking at different asset classes to move your treasury into, and it was gold, it was Bitcoin, there were different things. What is it that got you into Bitcoin, that turned you around?
I think the pandemic is a catalytic event and accelerated transformation in a couple of areas. Zoom went from 10 million users to 400 million users in weeks. Like we embraced remote work and video conferencing, and probably we leaped forward a decade. And in the same way, in March, we had a set of lockdowns, which really impaired Main Street assets and operations. But then we had a V-shaped recovery in Wall Street. And that K-shaped response, where Wall Street recovers and Main Street doesn't recover, caused me to stop and reassess everything that I knew about finance and economics. And at the same time as that, we had an aggressive fiscal response by the central banks everywhere in the world. And the real result of that is that the money supply that had been expanding by 5% a year for about a decade started expanding at 20 to 25% for this year. And now I realize, and we look out, we have a forecast. I mean, most reasonable people would think we're going to continue to run deficits. The interest rates are going to continue to stay low. We're going to continue to create more M2 broad money supply. And we're going to be in a monetary inflation environment that looks more like 15% a year for the next 5 years instead of 5%. So 2020 was the year where you had a problem, and the problem got really big. In essence, the cost of capital for any corporation and any investor leaped from 5% to 15%. It used to be, if you didn't get a 5 to 8% return on your investments, you would say, I'm not keeping up, right? The S&P was about 8% return over the decade. And it makes sense to get 8% against the cost of capital of 5%. If the risk-free cost of capital is 5%, tack on 3% risk, you're at 8%. That's what the market looks like. What happens when the cost of capital goes to 15% and now you got to get 20% return on your cash? That ain't happening. On your bond, that ain't happening. On your real estate, on your stock. The only way you get over the hurdle rate is you either have to grow 20% like Amazon or Google or Facebook. You got to be a screaming great big tech company, or you have to leverage up. You have to borrow billions, buy back your stock, cut your share count in half, and that way leverage up your cash flows, which are growing less than that cost of capital. Everybody leveraged up for a decade. When the interest rate gets to zero or close to zero and everybody's got full debt on their books, you've leveraged the bonds, you've leveraged the real estate, you've leveraged the stocks. Big tech's had its run. What are you going to do, right? And it's not a problem if you're just expanding at 5% a year. You're going to lose half your money over 12 years. Okay, you can think about it for a year or two. When the monetary supply is expanding at 15% a year, you're going to lose half your money over 4 years. And now you start thinking, well, I mean, half of my wealth is going to be cut in half unless I make a good investment. And every investment's getting a lot harder. Very complicated. That'll shake you out of your comfort zone and kick you into a search for something new. And that's how I discovered Bitcoin. And that's how most people are discovering Bitcoin. They've been forced out of their comfort zone. They need a safe haven asset, which is not pegged to fiat cash flows. It's not a function of the cash flow forecast or the bond coupon or the real estate rents. So what would that be? Gold? Well, gold was the best idea in the 19th century. And we can have a debate over how it worked in the 20th century. But In the 21st century, if God came down and he created perfect gold, he would create 21 million gold coins, put it on a network that you could move at the speed of light if you wanted to, and make it impossible for anybody to ever create any more gold. He'd make it impossible for a bank to steal your gold. He'd make it impossible for anybody to lie to you about how much gold they had in the vault. He'd make it perfectly transparent and he'd give it to you. That's what Bitcoin is. It's digital gold designed with all of the attributes we love about gold, none of the liabilities.
You've been critical on 2020, gold's performance. You said this should be the breakout year, and you said that's what convinced you that it was Bitcoin, that it did 300 some percent, gold did 15%. Is gold dead? Are you saying it's now going forward, it's no longer an asset?
Yeah, gold's dead money. Sell your gold, buy Bitcoin, because other people are going to sell their gold. And if you wait until you've been front run by all the hedge funds, when they dump their gold, you're going to be the last person out. I think gold's getting demonetized. That is, like being demagnetized. It's like there's $10 trillion worth of monetary energy in gold right now. Eventually, it'll only be the central banks that'll want to hold it. Every private rational actor is going to move out of it and move into Bitcoin. What is it good for? Well, people held gold for political unrest. Lord knows you got enough of that this year. They hold gold as a hedge against money printing. We got a lot of that this year. Why hasn't gold tripled? Gold had a slight bounce up, but look at every asset class for the last 6 months. Look at gold, look at NASDAQ, look at S&P, look at bonds. They're all chopping. They're not going anywhere. What's working? Bitcoin's working. It's tripled or quadrupled, but let's say tripled easy. Square is working because Square plugged into Bitcoin's network. Square lets you buy Bitcoin on a mobile app. PayPal's working because PayPal's plugged into Bitcoin. It runs on a mobile app. Grayscale is working because they plugged their mutual fund or their investment fund into Bitcoin. Things that are plugging into this digital monetary network are working. Things that are running on top of traditional fiat euros and dollars, they're chopping. And then, of course, if you're unlucky enough to have companies or investments in Venezuela, Argentina, Lebanon, Turkey, South Africa, fill in the blank, they're not working at all because the currencies are collapsing. And no company can be successful, no matter how competitive it is, if it's generating revenues in a currency which is collapsing or weakening. And so that means none of those stocks are going to be a store of value if their currencies don't hold value. You're swimming against a 15% annual monetary inflation current, which is in your face. It's a wind blowing in your face right now.
You described some basket case economies. Do you think there will be another gold confiscation or some kind of confiscation where the government comes in and just takes people's assets, whether it's gold or anything else?
I don't think there'll be confiscation like 1933, at least not in the U.S. I can't speak for every country. I do think some countries, like China, they're a little bit threatened by capital flows. Zimbabwe, when their economy collapsed, they didn't want people to be able to buy Bitcoin. If countries, in a country where the economy completely collapses, they will probably be concerned about capital controls, and there'll be various regulations when you have a currency collapse. In Argentina, we had there are quasi-capital controls there about how much money you could move out of the country. And so those happen from time to time, and we'll probably continue to see those. But in general, I think that more likely gold is just going to be passed over. It's $10 trillion right now, and it's seen its height, and it's probably going to peak and deteriorate by $1 trillion a year or something like that for the next decade. It's seen its best years. Bitcoin is going to grow past $10 trillion and then 20, 30, 40, 50, 60, 100 trillion, I think, because it is the digital monetary network, and half of all the money on earth wants to be in a monetary network. We're looking for a store of value for half of our monetary energy, and currencies aren't working, gold is not working, index funds aren't working. People, as soon as they start to realize Bitcoin works, they're all going to jump on it. And how fast? Well, the thing's growing 200% a year. You can't grow much faster than 200% a year, I would think. So it's going pretty fast. At some point, the Bitcoin will be wrapped in a regulation that's at parity with the regulations that control cash, bonds, stocks, real estate, AML, KYC regs. I don't see that as being a problem. It's probably a welcome thing because institutions and corporations are going to funnel 10x and 100x as much money into it as it normalizes in that way to parity with stocks and bonds. So that'll probably happen.